Heyo, how's everybody doing today? Let me make sure my mic is set up. Right. It is. It is. It is. 619 said he's waiting. What's up, 619? Oh, I got a different candle lit up today. It's a vanilla one in the background. Guys, crazy things, right? The government shutdown. The job numbers came in. They're horrific, and the market is pumping. What is going on right now? We're going to break it all down. Don't you worry. We're going to break it all down. Let me share real quick on X to let everyone know that we are live. Send that out real quick. Man, how's everybody doing today? Markets look pretty. I sold. What's good to invest into? Oh, man. Well, I'll tell you what, man. I'm going to go through some of the macro trends we're seeing right now. I don't want to be a Debbie Downer. Okay, but there are a lot of warning signals. I'm still very bullish on Q4, but as we move into 2026, I don't know, man. There's a lot of people saying that we're gonna, the market's gonna extend into market cycle is gonna extend into 2026. I'm not so sold on that, and not just crypto. I'm talking about all markets, man. There's a lot of stuff. We're gonna dig through those details in the show today. We're also going to talk about some news around Dynex that's kind of interesting. They're doing something that we haven't seen any other deep end projects do, and I have some questions, potential concerns around it. But if you look at DNX token, guys, it's up a lot based on the news that dropped. So we'll talk about that. We're going to dissect some statements from Ariel with Hivemapper, try to understand what that could mean in the coming weeks. What's up? What's up, buddy? Yes, great interview with Helium. I agree. I don't know why you had to say Helium, but okay. Okay. Yeah, I agree. That was a great interview. Oh, we got Jeff K in the house from oh man, am I drawing a blank? Flux. Flux. How's everybody doing today? Said thanks, 619. Look at the community all having a kumbaya. That's so cute. But I agree. Kevin, you gotta get on camera more, man. That was good. And Suburban Crypto got on there. That was pretty solid as well. Oh man. So let's talk about it, guys. We know the market's up right now. But this is the news that dropped today that was kind of interesting. And the government shut down. Okay, so that's official. We talked about that yesterday. It was definitely expected on Polymarket. Well, how long will it last? Well, we'll talk about what that could look like. But then we had the job numbers come out today. Okay. Private employers shed 32,000 jobs in September. Okay. Economists were expecting us to add 51,000. So not only did we not add 51,000, we lost. We were negative 32,000. They also went back and they had to adjust the August numbers as the real numbers came in. Initially, we showed a gain of 54,000. Now we're showing a loss of 3,000. Okay. And now the markets are rallying. But it's like, guys, the job market is not looking good. These are not good numbers. This is definitely concerning. And obviously it says here, despite the strong economic growth we saw in the second quarter, of course, that was after Q1 was really bad because all these companies that pull in all their products ahead of the tariffs. So GDP looks horrible in Q1. Q2 looked really strong because of that. They did adjust it later. It ended up being stronger than what was originally reported. But says this month's release further validates what we've been seeing in the labor market, that U.S. employers have been cautious with hiring. Yeah, no kidding. It says with the U.S. jobs report for September likely to be delayed. So this is another thing. We're not going to see all the job reports that we would normally see moving forward. This is going to the last one we'll see, at least as long as the government shutdown lingers. Okay. But it says the private payroll data is in greater focus among economists and market watchers because we're not going to get any more figures until this government shutdown is figured out. And it's very odd, right? We're seeing on this news that the job market sucks. the government shut down, things are pumping. Like, what's going on here? Not only just crypto, but S&P rises. This is from today. Rises to new record, reversing earlier losses. Huh. How about that? I don't know if I highlighted anything here or not. So we're seeing all-time highs in the stock market. We're seeing crypto markets pump. Why is that? Well, I think on one end, the expectation is that this isn't going to last too long. Okay. If you look at Polymarket right now, there's about a 62% chance right now that's being baked into the markets that this is going to get resolved within the next week and a half or less. Okay, so that's certainly part of it. The bigger part, though, in my opinion, is this right here. Look at the odds of rate cuts, because, again, it's been a question of, okay, is the job market going to weaken enough to force the Fed's hand to lower rates? And they have to obviously look at inflation numbers. But I think after those numbers came out today, the job market numbers were so bad that now there's a 95% chance, it's basically a lock, that rates will be cut this month. And I think that is what markets are reacting to at the moment. Okay, so this is an 8% bump on a quarter point cut and a 1% bump for a combined 9% increase in the likelihood of a rate cut in October. And I think that is what markets more than anything are responding to. And it begs the question, though, if the underlying economy is weakening so much, even if they drop rates, why is the stock market rallying, right? It seems to be disconnected with reality. And we've talked about this, and this is exactly what's happening. This is the biggest concern for me, and I'm going to kind of go through my thesis here and why. Okay, the top 10% of wealth right now own 93% of stocks, the highest ever recorded. Okay, the bottom 50% have just 1% of the stock market. So this is a big reason why there's this huge disconnect. The uber wealthy are the ones that are investing. And even though half the country is struggling right now to make ends meet, you can still have this disconnect with all-time highs in the stock market, while the vast majority of the population is really in a recession. Let's be real. We're just not seeing it. The other thing that we're seeing, and we've talked about this a little bit too, the top 10% of income distribution is responsible for nearly half of consumer spending. So while half the country can't spend money, we're still seeing strong, economic activity, because the top 10% are responsible for half of the freaking spending in the country right now. Okay, so that is how we can have this disconnect where, yeah, the underlying economy sucks for most people, but investments are still doing well. Okay, but how long can that continue? That is the big question, and I'm going to talk about some warning signs and what, to me, is really concerning. So, number one, consumer confidence index dropped to 94.2. This is the lowest since April, when we had the tariff scares. Okay, so that's not good. You've got some signals out of the auto industry. Okay, so they're talking about the canary in the coal mine here. By the way, fun fact, we're going to get back into this in a second. The canary in the coal mine. Do you guys know the history behind this? So, so I was like, I've always wondered where this originated from. You guys probably already know. But it says coal miners used to take canaries into coal mines with them. Canaries are more sensitive to dangerous gases than humans are. If the canary died, the miners knew there were dangerous gases present and would leave the mine. So, obviously that's what that means. It's an early warning sign. Okay. So the canary in the coal mine, the auto giant's collapse sparks recession fears, haunting parallel to the 2008 crash. We're seeing a lot of parallels with 2008, guys. So it says that car loans, which have never been bigger at 1.7 trillion, is showing that we could see a repeat of the 2008 financial meltdown. Now, it's not as high as home loans were in 2008, but experts warn it could be enough to trigger a domino effect reaching mortgages. It says millions are already behind on subprime car loans, which experts say could be the first warning sign of broader debt problems and eventual mortgage defaults. Now, The warning signs are stacking up. And there's another company that claimed bankruptcy or filed for bankruptcy, rather. Says experts told the Daily Mail these bankruptcies are another part of an auto industry flashing danger signals that could spill into the broader economy. Well, speaking of bankruptcies, if you look at the total filings, this is for business and non-business, we've been climbing every year. It does say here that we're still well below the historical highs, but this is a trend you don't want to see. Okay. So bankruptcies are on the rise for business and non-business. You have U.S. corporate bankruptcies on the highest pace since 2010. That's not good. You have credit card debt reaching record highs. 1.2 trillion came in the second quarter of 2025. Says among the causes are inflation, economic uncertainty, job instability. What's going to happen as we continue to see layoffs, as we continue to see people in the unemployment line? When they don't have income, guys, they're going to have to continue using credit cards. What happens when you can't use credit cards anymore? Okay, $1.2 trillion in credit card debt is not a good sign. You also have credit scores falling at the fastest pace since 2008. Okay, Americans are struggling to keep up with a high cost of living. Again, yes, the stock market is at all-time highs. The uber wealthy, the wealth gap is getting bigger and bigger. But most of the people in the country are struggling. They're in debt. It says younger Americans exposed with a double whammy of high student debt and low entry-level hiring. You talk about that. These students that are graduating right now cannot find work, are under even more financial pressure. Okay, the findings underscore the growing disconnect between the euphoria on Wall Street and the pessimism on Main Street. So again, Wall Street versus Main Street. Stocks continue to shatter record highs. Significant chunk of Americans say they are hurting. And that is, the big question for me. How long can this disconnect last? Because, yeah, the uber rich can hold up the stock market, can hold up investments. But what happens when the job market weakens enough? At what point do we get to a point, a breaking point, if you will, where the vast majority of people can no longer spend money? We have defaults skyrocketing, and the uber wealthy kind of realize, shit, it might be time to cut some of our investments and move into cash, because consumer sentiment still does matter. We still need spending from the overall population. If that starts to drop significantly and spooks the markets, and you start to see the uber wealthy sell off, guys, this could very quickly get ugly. And this is what I'm very concerned about. Not necessarily in the next month or two, but certainly as we look into 2026, and the numbers are actually showing this. We'll talk about that more in a minute. But just looking at the stock market, you look at what's called the Warren Buffett indicator. Observers have warned that a crash could be on the horizon, or pointing to one key metric that's now raising concerns. That's the Buffett indicator. Okay, so this is developed by Warren Buffett, divides the total market cap of publicly traded U.S. stocks by GDP. Generally speaking, if you get above 200%, you're playing with fire. We're at 219% right now, guys. We are overextended. Okay. Overextended. We're seeing this across the board. How long can that continue? I mean, you can make the argument that, there's been so much money printed over the last 5 years that maybe we're catching up here. Maybe we can stay in this zone longer. Sure. Okay. But at some point, if the job market continues to weaken, at some point, there's going to be something that breaks, in my opinion. And this is something I think we need to really take seriously. If you look at Polymarket, again, I'm not saying it's going to happen this year. The markets don't think so either. This got all the way up to, 66% back in February, but, sitting at 6% for 2025. What about 2026, though? Right now, guys, there's a 39% chance in the prediction markets that we see a recession next year. Okay. So all this to say, I remain very optimistic, very bullish on Q4. I don't know that we're necessarily out of the woods here, because I'm going to talk about some of the things that I don't think the market's really baking in on the crypto side of things, at least, that we could see some more downside. I don't know that it's going to be all up from here in Q4. Maybe, I hope so. But I still do believe that we will see a nice run up in Q4. But one of the things I'm going to be paying very, very close attention to here is this fear and greed index, and cutting positions and moving into stables, as we start to see the market move up, assuming it does. I mean, we all hope so, right? Because I believe at any point in time, with some of the underlying shit that's breaking right now in these numbers that I just went through, things could break, man. And I think that we could see a sell-off, and it could get really ugly. And the big question for me, before we move into the crypto side of things here, what type of recession will this be? Because what we saw in 2020 was not really a recession. It was a V-shaped recovery almost instantaneously. If we see it in the next 6 months, what is Jerome Powell going to do? Is he going to cut drastically enough for a V-shaped recovery? I think if it happens in the second half of 2026, once Jerome Powell is replaced with someone that's probably more willing to cut rates, we could see a faster recovery. But I know that, I don't want to be overexposed when it happens. If and when it happens, there's no guarantee it does happen. But to me, there's just too many warning signs flashing. We know there's this disconnect with reality. What is the risk tolerance for the uber wealthy before they start selling and cutting bait? Because I guarantee you, they don't want to be the last ones to do it. They're going to want to front run the rest of the uber wealthy that are holding the stocks. Okay, and Warren Buffett's sitting on an immense amount of cash right now. He's missed out on some gains the last year for sure. But guys, I fear that it's just a matter of time. Again, I don't want to be super negative on a day when the markets are green, but it is important to touch grass and remain in reality here. Okay, that's it. Let's talk about the exciting stuff happening right now, guys. We do have the green market, and this is lovely to see. This is the top 100 here. Not just the top 100. I mean, we're seeing it 100 to 200 across the board. Even some of the small caps, even more. So it's great to see, guys. And everyone's, you're seeing it all over the timeline. October. I agree. This is something we've been talking about for months now. Q4 was kind of in the thesis. Potential sell-off from FOMC. We kind of did see that second half of September. And now we're seeing October pump come to fruition. Bitcoin sitting at over 117,000. It's a beautiful thing. We love it. Solana's been on a nice little tear, up to $218 today. Because it was not even that long ago. What were we at like a week ago? We got down to 192. So we've seen quite a rebound in Solana. Obviously, it's one of my highest conviction plays right now because you follow the institutional money. Let's do a little update here on our digital asset treasury plays. One of the things, by the way, I'm noticing, this is supposed to update every 6 hours. You can kind of double check to see if it has. If you go to, let's see here, overview, you can take a look at how many tokens they're holding. So in this case, you see UpXE here holding just over 2 million tokens. So 2,018,419. You multiply that by the current price of Solana, call it 218. So this net asset value should be 440 million, not 430 million. So this hasn't been updated yet because Solana's price is appreciated today. You can kind of work backwards, though, to what the fully diluted valuation is, because now that we know what that net asset value really is, you just take your fully diluted, so UpXE 542, divide that by 440 instead of 430, that would actually put us like 1.22. So, if you want to double check if this is fully updated or not, you can do some math there to double check it. But regardless, UpXE on the day, let's take a look here, up 5.11%. That's pretty nice. DFDV down 1.89%. Obviously, that premium was a little bit higher on the MNAV. Forward Industries up 2.7%. And then if you look at like the Rex Osprey, though, that's the one that actually tracks a lot more closely, 4.82%. So it's, the spot ETFs to me is what I have more interest in. I think, the digital asset treasuries are interesting for sure. It's a way to, if you don't want to buy the underlying asset and you want to invest through like your 401k or something, or your IRA, it's a way to get access or get exposure before the spot ETFs get approved. But, regardless, though, I remain very bullish on where Solana is headed. And I believe the spot ETFs are coming, but we need to talk more about that in a minute here and what the government shutdown could mean for that, because I don't think the markets are baking that in quite yet. But this is some big news, guys. This is from Swift. Swift came in and said that this is yesterday, came on and said, very pleased to announce that we'll add a blockchain-based ledger to our technology infrastructure to allow for trusted movement of tokenized value across digital ecosystems. That's interesting. So who are they choosing? Because a lot of people thought it'd be XRP. But it appears that Chainlink, guys, Chainlink is the one right now, at least that we know of. This Chainlink has partnered with Swift to launch a technical framework that will enable banks to access blockchain without the need to upgrade infrastructure or overhaul legacy processes. So, guys, we've been covering Chainlink a lot this year. Chainlink seems to be everywhere. Now, there's some questions about how much revenue they're generating. There's been a lot that's been kind of off-chain that they're looking to add on-chain now to make it more transparent. But on this news, I mean, Chainlink is a nice little pump, 6.25% today. If you look over the last year, though, let's see, since the bottom here back in April, we got down to $11.45. So it's almost doubled there. Now, what about XRP? XRP still is up on the day, but this Swift news, in my opinion, is not a positive for XRP, because a lot of people were hoping that XRP would be the ledger they chose. Seems like that is not the case. So regardless, I think looking at the spot ETFs, which ones are coming, that can give you insight into institutional money flow. We have Chainlink there. We have XRP with Solana, of course. Litecoin's one tomorrow, but something that's not being talked about, and I tweeted about this earlier today. Actually, Tyler with Unleashing DePIN brought this to my attention a couple of days ago. I was like, I don't know. And his question was, will the government shutdown potentially delay the spot ETF applications? And as it turns out, yes, it probably will, guys. And this is something I don't think the markets are baking in quite yet. I think there's a big expectation that these ETFs are going to be launched in October. Not to say they can't. It depends on how long this government shutdown lasts. But this is a threat that I think could surprise markets a little bit. And tomorrow could be when we start to see that surprise. We'll have to see how this plays out. But it does go on to say here that a looming government shutdown threatens to delay SEC decisions on several crypto ETFs, including funds tied to Solana and Litecoin. So if the U.S. government shuts down this week, several long-awaited cryptocurrency exchange-traded funds, ETFs, including funds for Solana, could be thrown into limbo just as they near the finish line. Oh, man. Says one person familiar with the process says they believe the approvals could still land as soon as next week, assuming the government remains open. Okay, so that's key, obviously. Says that the ETF application is thought to be close, of course. And this is the big thing to pay attention to for tomorrow. And that is the Canary Capital's Litecoin ETF due for response tomorrow. So, guys, this is something that, if it is approved tomorrow, that does basically green light all the rest of these ETFs. But if it's delayed because of this government shutdown, well, the markets are going to read into that for sure. Okay. And that means that other ETFs, the Solana ETFs, are likely to be delayed as well. And it adds additional, guesswork, if you will. It's like, okay, is it not being approved because of the government shutdown? Or are they just delaying these things further because these have been delayed? Either way, it's going to be uncertainty, and that's not good. Okay, so tomorrow's a pretty big day, actually, on these ETFs, and I think we could see the market react to this decision. Okay, so this is super, super important, at least in the short term, okay? I don't think this is going to have long-term ramifications in Q4 because, again, we don't expect the government shutdown to last that long. But who knows? I mean, it lasted like 34 days the last time when Trump was president. So I don't know. I don't know how long it'll last. Probably market says 66% chance it'll end within a week and a half. Let's hope that's correct. But this guy is the one to keep an eye on. Okay. All right. Let's talk about DePIN. DePIN is up, baby. We've got IO, Demo, Flux, GeoNet, Render. All of them are up, except for Nasana. Nasana's pumped pretty hard recently, though. But you love to see it. Last hour, down, mixed. But on the day, pretty good. On the month, up overall. Okay, still a mix. But it's been a good day. One of the things I want to cover, though, is what's going on with Dynex. I don't know if you guys saw this. This is a kind of a big deal, and it begs the question as to whether we'll see any other DePIN projects do this. But Dynex announced that they're going to be transitioning to institutionalized security token. So they're going to be essentially IPOing, from what I can gather, and moving into like the traditional stock market and away from crypto. And they've been they've been underperforming. There's a lot of FUD about their project. They're doing real work, though, and that's the big deal here. And here's their statement about it. So I might as well just go into that. Okay, so they said that the valuation gap is large. So Dynex remains significantly undervalued compared to leading quantum peers, many of which are valued around $10 billion. Dynex sitting like a $6 million market cap. I mean, that is a big gap. And obviously DePIN has been very much underperforming. So, will this lay the groundwork? If this is successful, if Dynex is very successful in this transition, could this lead other DePIN projects that are, underperforming compared to their fundamentals to make this a similar move? I mean, this is the big question around this and how this will play out. It says that DNX will be eligible for conversion to the security token during an initial 30-day exchange period starting in February 2nd, 2026. So we're still a ways off from this. But it does say this: subject to regulatory and operational considerations, Dynex may discontinue DNX trading and phase out the existing chain thereafter. Of course, there's a lot of questions here if you're a DNX holder. One being, depending on where you're located, is this even legal for you to transfer over into a security, right? There's this that was posted in their, I guess it's in their Telegram group. It says there will be a conversion price, which 1 DNX will equal. We are not in the position to disclose the ratio, but be assured that there won't be a single holder who has a loss, no matter when and for what price he bought. I don't know how they can even make this claim. Okay, that seems very questionable to me in and of itself. That you can guarantee that no buyer will ever, even if you bought at all-time highs, no buyer, no holder will be at a loss in the conversion. I mean, that would mean that they're guaranteeing that this is going to launch at a certain market cap when it IPOs. I just don't understand how that's possible. This account does a good job of kind of breaking down. It says Dynex, the DNX security token swap will use a fixed conversion price, and no holder will take a loss even if they bought the all-time high. That's a bold pre-IPO signal. Yeah, that's bold. I just don't understand how they can even do that. It says, why are they doing it? To build investor trust before they IPO, enter capital markets clean, align with institutions and underwriters for compliance, smooth cap table for regulated security. I mean, I don't know that we've seen any other projects do this, move from crypto directly into being a publicly traded company. But here's what it implies: if nobody loses, because the all-time high for DNX is $1.40, so that would imply that is the floor. Okay, which then would put us at a $500 million market cap. In their recent AMA, that's what they targeted, because it's currently sitting in a $5 million market cap, around there. So how can they? I don't know how they can claim that there's going to be at least a $500 million market cap. So there's a lot of this doesn't really. I mean, I think Dynex is a legit project, but a lot of this doesn't really pass the sniff test. How is this going to play out? And I think we need more information. But bottom line, a guaranteed no loss conversion before IPO is rare. I agree. So I just don't know how that's going to work. But I have to say this much: the market has liked it. Now at a $7 million market cap, it's up 73%, 72% in the last day. So that is certainly a good sign for DNX holders. I do own some DNX tokens myself, but I just have a lot of questions how this is going to play out. And the other thing is, if this doesn't end up being wildly successful and this does work out, I think it could open up the door potentially for other DePIN projects that are fundamentally strong, but really underperforming. So this could be kind of a breakthrough moment and create a new mold for other projects to follow. We'll see. I still have some skepticism about how it's going to play out for sure. One other thing I want to pull up here. Of course, the news yesterday, we saw a lot of different media has picked this up now. This is talking about the no action letter for DePIN. So it's cool to see. One of those was actually Yahoo Finance. They talked about Helium in particular and what could be deemed as a great day for DePIN. Okay. Obviously, they talk about how the SEC had sued Helium developer Nova Labs, claiming its native token was unregistered security. Obviously, that doesn't seem to be the case now with that new guidance. Obviously, that was settled for a $200,000 civil penalty. They had originally been trying to get $42 million out of them. So that's a big development. The other thing is they have a separate article talking about how, they cited the World Economic Forum report that DePIN was expected to go from $30 to $50 billion sector today to $3.5 trillion by 2028. Says for that potential to be realized, innovators in communities must be able to operate without the constant fear of regulatory misclassification. So obviously this is a big breakthrough, guys, for DePIN. And speaking of DePIN, at Token 2049, they had DePIN Day. There's a number of different projects there. Arweave was highlighted. Obviously one of my favorites, but one I want to talk about, a Cash Network here. This came up on our space yesterday. We had Nick on from Blockworks, and he was pretty excited about some of the changes that a Cash Network has going on with their token burns. So I bring it up because, well, the cash price right now at $1.03 out of all of the projects, the DePIN projects, this one's really moved the least. So it seems like they've got a huge presence in Singapore. Obviously, I'm very bullish on the compute side of things. They have some tokenomics changes coming up that could bode well for the token itself. Just proof of this. This is the video I did back right when the market was like bottoming back in June. Pretty much all the projects I covered are up pretty significantly. A Cash Network is actually slightly down. So this is one that I'm kind of looking at to potentially expand a position into. I'm going to do some more research on what the changes are on the tokenomics. I'll highlight that tomorrow. But to me, it's certainly an interesting project. It's been around for quite some time. It is available on Coinbase, I believe, crypto.com as well. But we'll talk more about that tomorrow. The last thing I want to talk about, though, is this tweet right here from Ariel. Okay, so this came up on our space yesterday, and they obviously have a big announcement coming on October 6th. I'm going to be hosting their AMA on, I believe, the 14th or the 15th. It says here, the DePIN mindset is lagging reality. And here's the actual supply-demand curve where we started, where we are now. So the best DePIN projects build supply early. We saw that with Hivemapper, getting dash cams out, Helium, getting hotspots out. In many cases, that's what you see, right? You have to get data collection. You have to set up the infrastructure first using tokens, and then the customers come after. Okay. At this stage, the dominant narrative becomes all supply, no demand. And it says that's true for a moment. Okay. And that is what we saw early stage with Helium, for example, right? We saw a ton of IoT hotspots get set up. We saw really no revenue, no demand. That's really caused a lot of FUD in the last market cycle and caused the price to really drop. We saw this even early on with Hivemapper, right? We saw a bunch of dash cams out, a bunch of supply being built. The customers are now coming later. But it says, while that narrative sets in, real demand is quietly being built. Trajectory is slower and structurally different from supply, and this is absolutely true. Wingbits has customers before they launch. Yeah, it's because they delayed their token for like 2 years. Yeah, I mean, look, we are seeing a little bit of a structural change here, where we're seeing certain projects have revenue before they launch their token, but they're also promising like pre-mined tokens basically for contributors. So to me, it's like kind of the same deal. People are still participating with the promise of getting tokens when they launch. It's just that they're delaying the launch, giving them more time to get revenue. Now, to me, I like that. I like the fact that you can't just have people selling tokens, without any customer announcements and just driving the price down. That's nice for sure. And I think we're going to see more and more projects do that. DAB is another one, right? So we're seeing that more and more. But it does go into number 4 here. It says that crypto markets are fickle, to put it mildly. As attention shifts, supply growth stalls or even declines. And this is true. We've seen, you become kind of a slave to the market conditions, right? And that sucks because if market conditions are down, can really be difficult to build up supply. And I will say one thing I do want to call out here, though, is, Gabe, who is no longer at Hivemapper, he really cut rewards down significantly. Okay, so part of this is market conditions. Part of this, in my opinion, is their fault. Okay, and Gabe and I kind of butted heads on this a little bit because I think they were a little bit too aggressive in cutting rewards myself. This is about 1.5 years ago now when they put a bunch of MIPs out. So, that's the deal, guys. Like they now are in a point where, and GeoNet's the same way, where they have customers banging on their door, kind of like, hey, we need more coverage in this area. Okay, so that's the deal. You cannot have hardware sales as your customers. That's correct, and that actually gets into one I'm going to talk about here in a moment. And it does kind of talk about here, like the demand keeps compounding. Eventually, network flips. Now it's supply constrained. That's exactly where they are right now. There's a lot of people that still are under this impression and this narrative that there's too much supply and demand, not enough demand. I think we're seeing things shift here, guys. I think we're seeing things shift where now there's not enough supply in many cases. And I think part of this is market conditions. It's a lot harder to get people to participate in your project. Your token price is down. Okay. But the demand is increasing. So let's talk about solutions. And this is the thing I want to highlight and make maybe some predictions here. Number 1, upfront cost is too high. Expecting people to spend $300 to $550 to contribute, supply is a non-starter. Some projects push hardware to $2,500. I think he's probably talking about Rover here because the LC is $2,500. The model has to change if you want to scale and if you want to kind of remove the market conditions from the equation to an extent. I agree here. Now, something that Ario said that was really interesting on the space yesterday was he talked about, okay, he used solar as an example, because I used to be in the solar industry. He said, if you are going out and just trying to sell a $40,000 system to people, he said 5K with tariffs. Oh, man. But he said, if you're trying to sell a $40,000 solar system to people, you would have a much harder time selling to the vast majority of people out there that don't just have 40 grand to drop, like that, right? To buy solar. So they have financing available, right? He said, if you could save $600 and pay $100 a month, that's a lot more interesting, a lot more attractive to people. And then he went back to Hivemapper. He said, going to these businesses and saying, hey, you need to spend $50,000 on dash cams to participate in this and have our services, that doesn't work for most businesses. So that makes me wonder, are they looking to introduce some sort of program to remove that upfront cost and remove that barrier to entry to make it easier to get these dash cams in people's hands? I don't know. Okay. But to me, you can kind of draw that conclusion. There has to be something there they're working on, in my opinion. And I think that's a big deal because, to your point, you can't have the hardware sales, as your customers. Okay, so what if you remove that friction? Okay, what if you remove that upfront cost somehow and allow people to participate, and remove that barrier to entry? That's interesting. The other is sustained supply can't rely solely on the crypto community. It plays a critical role, but the scale required demands far broader participation. They're addressing this now. There's a lot of people in the deep end sector in the crypto industry like, oh, they're trying to get rid of deep end and they're trying to get rid of crypto and they want these fleets to join. Well, fuck yeah, man. Wouldn't you guys like think about this from a business owner perspective for a second. If you're reliant on market conditions and favorable market conditions, that's scary, man. Especially in crypto, especially if the year we've seen here where DePIN has been really pushed down. Okay. So wouldn't you want to decrease that risk? If you can get these into the hands of fleet owners, and of course, DePIN is going to still be critical in all of this. Like, we still need the individual contributors. We still need the people building out their fleets to fill in the gaps. But if you also can, have maybe half your participants, they're business owners with fleets that are more concerned with the fleet tools that you have to offer and less with the token, and are therefore consistent contributors. Okay, that to me is a smart business decision. That means that you can get consistent data. So when you're talking to potential customers to buy that data, you can say, hey, yeah, we're going to have consistent data for you to buy. Okay. The fluctuations of crypto and what we've seen of DePIN and it being so fickle, it's not sustainable without at least having some non-crypto participants, in my opinion. It's too difficult. So to me, it makes sense, and I don't understand why people are so up in arms about it, but I believe it does help the long-term viability and remove some of that risk. The last thing here, liquidity is a problem. DePIN tokens need access to bigger markets. Okay, large exchanges are filled with low utility L1s and L2s, while most DePIN projects remain locked out of where real volume trades. And this came up on the space as well. I think it's become very clear that DePIN and Solana is making a push to get Binance listings, okay, to get access to the Asian markets. It's a lot of volume taking place on Binance. And if you remember, I believe it was, $22 million. Let's see here. Let's see if I can pull up this report. But back when Helium launched IoT and mobile, there was, let's see, here it is. There was an accounting error. Here we go. So Binance bungles accounting for Helium tokens, overpays clients millions. So what happened was they had H&T listed, they launched mobile, and they had it mispriced. So it says that Binance is down some 4.8 million H&T tokens that were erroneously dispersed to users. So they were trying to withdraw mobile, and they accidentally sent them H&T. So there's about a $19 million expense to Binance, which in the grand scheme of things is nothing for them. But at the same time, it seems like ever since this happened, Binance has been unwilling to list DePIN tokens. So this is something that has to get fixed. And I do believe that the Solana Foundation has some weight to throw around there. They've made it very clear that they want to, push DePIN, especially as they get institutional interest. I've pulled this a million times, but they listed this on their actual website. I think they want to be a chain that has real building taking place. So maybe Solana can throw around some weight with, Binance to get some of these things listed. But it is key, and that is, again, looking at these three things, I think it makes sense. Lowering that barrier to entry. So when I first got into HiVet, where they say they would continue the HDC and camera price would just get cheaper, making it easier to get into other markets. Yeah, I'm not talking about that though, man. I'm talking about if you think about the comparison he gave, basically it was like a solar lease option. So instead of you buying the hardware up front, you just make a monthly payment to get solar on your roof without any upfront cost. Potentially, maybe they're looking at like subsidizing it, so you just have, well, think about Helium Mobile. They announced, or they haven't officially announced it, but he posted a picture with Helium Mobile. So, maybe they have a deal where they're going to subsidize the hardware with, Helium plan or something. I don't know, or bring the cost down drastically. I don't know, but that's what the conclusion I can draw from his statements yesterday. So I think that would be a big deal. Well, to see. I mean, the big announcement apparently is coming on October 6th, I believe. So that would be big, in my opinion, especially for the fleets. I mean, if you were a business owner, you could bring down that upfront cost of capital, get these dash cams in your vehicles. That's a big deal. If they can get a Binance listing, that's a big deal, and minimize the risk of the deepen and crypto fluctuations and market conditions. That's a big deal. Okay. He did also announce, that they're going to have some multi-million-dollar contracts announced on the space yesterday. Okay. If you didn't listen to the space, let me pull that up. I highly recommend, because there's a lot of things he mentioned in there that I thought were really interesting. And this, I think you can draw some serious conclusions based on that. Let's see, where is that space? Here you go. So listen to this, guys. So the token burn quandary and Q4 outlook. So Ariel jumped in there. We had Nick with Blockworks join in, but that's where he made all those comments. So check it out. You said you don't do X. Good news for you, 619. I'm going to start today and tomorrow. I'm going to start getting a bunch of these spaces uploaded onto Spotify and onto Apple Podcasts. So we're going to be working backwards to get all these spaces uploaded on there, so you'll be able to tune in from those platforms. Because there's been some serious alpha shared, man, from some of these project founders. I think at this point we had Aoki on, Nils from Aoki. We had Mike from GeoNet. We had, obviously, Ariel's been on. We've had Mark Feidelman with Exhibits. We had Flux. The Flux one disappeared. They pulled it down for some reason. We've had a lot of project founders on. We had Havelo on, Dominic with Havelo. So we've had a lot of project founders on. And they've definitely given some really good alpha on these spaces. So definitely be on the lookout for that, man. I'll post it as well when I get those launched. But this is episode 27, so we've had a lot of them. Yes, sir. Yeah, I've had a couple of people ask about that. They're like, yeah, I don't really do X spaces, but they would like to listen on their commutes, whatever. So I thought about even uploading the audio from my live streams, but the problem is a lot of it has visuals, right? So I don't know how that would work. I think Spotify does do a video option, so maybe I'll look at that. Anyway, guys, that is what I've got for you today. The markets are up, man. It's exciting. And I don't mean to be a Debbie Downer, but I think it's going to be really, really important. And again, my thesis is that Q4 will be good, but if the government is continuing to be shut down, will it delay the spot ETFs? Okay. Will the market react negatively to that in the short term? But the bigger picture to me is like, what if things continue to break, and this economy that has really been suffering starts to bleed through into the actual stock market? Because right now, this disconnect, I don't know how long that's going to last, guys. And is it a V-shaped recovery? I mean, I think that we could certainly make a case for, any big crash for us to recover quickly, depending on what the Fed does. But I just, I want to be a little bit cautious around that, because while everyone's, doing their like hoorah, about the market right now, there's so many warning signs flashing underneath it all that I think there's cause for concern. Okay. And that is all I got to say about that. Guys, have a wonderful hump day. It is Wednesday, October 1st. I think this is like episode number 73. So we've been at this for a while. Get outside, get some sunlight, touch some grass. Tell your loved ones that you love them. Seriously, though. And let's enjoy Q4, guys. Okay. Even if it's not up only from here, I do believe we have some good times ahead, some very exciting times. I appreciate every single one of you guys. Make sure to subscribe to me on YouTube if you don't already. Follow me on X if you're on X, and reshare if you would. Make sure to like it as well. I will let you guys go with that. Peace.